Welcome back to Midcap Radar. We are immediately moving on to the next management we have on the show. That's MTAR Technologies. It saw a subdued quarter in Q1. The company saw a revenue decline of 16% and margins also contracted on a yearly basis. To discuss further, we have Srinivas Reddy, the managing director of the company, joining us now. Good afternoon, Mr. Reddy. Any way we look at it, Q1 was a subdued quarter for the company. At the start of the year, you did give us a guidance of close to 30 to 35%, and this was trimmed from the 40 to 45% that you had earlier envisaged. After Q1, which saw a revenue decline, will you be trimming down the revenue guidance for FY24 for FY25 further? And also, what will be your revised EBITDA margin guidance?
Look, we are not trimming down any guidance as of now. We stick to our 30-35% revenue growth for this year. We can't judge by just one quarter. We have very strong 3 quarters coming up. As we have mentioned, our Q2 numbers are the highest. We would achieve the highest amount of revenue in Q2 itself, which is around 200 crores plus. And we continue to go in the same momentum over the next 2 quarters as well. So we stick to our guidance and also the EBITDA margins of 22% plus minus 100 basis points.
Okay. Mr. Reddy, good afternoon. Thanks for joining in. Your order book stands at 894 crore rupees. What is the year-end order execution or order book target that we can look at for FY25? And what kind of recovery are you seeing? Because you're sticking to the guidance. So what's giving you the confidence that the rest of the year will be strong? Which sectors are contributing to the growth that you're talking about?
We're looking at all the sectors. Basically, the aerospace sector, which we're doing pretty well compared to last year. The clean energy has picked up. We are back to normal right now. You must have seen the number of units that we are sending now is much more than what we used to send earlier. All the filters have been done. The new product is done extremely well. Similarly, we are pushing on the other sectors as well, in nuclear as well. So we are pretty much confident in terms of achieving our guidance numbers over the next 3 quarters, and including the EBITDA margins based on the higher revenue base, what we have.
And order book? Yes, please go ahead.
I'm coming to that. So we are going to close at an order book of 1,500 crores. We have a very strong set of orders, a lot of inflows coming in second half of the year, especially nuclear. We're looking at more than 650 crores of orders coming in. Aerospace sectors, clean energy sectors. So we have clearly drawn out our plans regarding that. So we will close at about 1,500 crores of order book by end of the year.
Okay, and out of the 1,500 crore order book that you're envisaging, a significant portion, like you mentioned, will be coming in from the nuclear space. What is the current situation as far as one of your important clients is concerned? How is Bloom Energy doing? You've mentioned that you expect some recovery there as far as the second half of the year is concerned. Can you quantify the kind of order inflows you could see from there?
It's already doing pretty well right now. If you look at the Q1, we have done, like, for example, the numbers speak by itself. We have done about 815 units. And Q2, we are planning for 990 units, which is way above the requirement. They're pulling in a lot of their requirements right now. They back substantial orders from various data centers. Things are moving very well right now with the new product. So we're expecting a lot more orders to flow in this over the next 2 quarters itself for the current financial year. So it is going to beat the numbers what we have expected initially of 3,300 units. Probably might even exceed that, but we are not taking that into consideration. So based on what we are doing today, we are pretty much confident about where we stand in terms of our guidance, in terms of all the sectors that we're looking at.
Okay, you're sounding positive, and it has come in after some time because there was weakness that we saw in FY24 as well. Mr. Reddy, I wanted to understand the export situation because the freight rates are higher. People are talking about, or companies are talking about unavailability of containers as well. You do have a sizable portion coming in from exports. Is there any issues that you're facing which could potentially be a problem?
There is an issue. I'm not saying that there's no issue in terms of exports, containers availability, but we have taken that into consideration. For US, I don't think that's such a major issue, but for Europe, yes. But most of our exports are to the US. So I don't think we'll have a situation as far as exports are concerned. Imports, we have made sure that we have taken such delays into account while planning in terms of the supply chain issues. We have done that already, and we are on track with that as well.
Okay, Mr. Reddy, thank you so much for joining us and clarifying on all of our queries. We'll now slip into a short break. SpiceJet will report its first quarter numbers today. We will put the spotlight on the company's performance and financial health on the other side. Stay tuned.